Hey, hi everyone. Welcome to another video. Today the topic for the video is using AI for stock picking. We have used this is a part of our AI tools series, and we have used AI tools for doing a lot of things in the world of investing. We have used AI tools to do fundamental analysis. We have used Claude to do fundamental analysis of Zomato. You can check my AI playlist videos for that. And we have used AI like Perplexity to entirely write Pine script code for a particular strategy that we have given to it, along with risk management and the fund management. We have used AI tools to do daily time frame analysis, DeepSeek, ChatGPT, Gemini, as well as Copilot, Microsoft. We have used to do daily time frame analysis, and Copilot we have used to uh, develop Pine script code for a swing strategy of 50 EMA crossing to 100 EMA. So all that we have done. We have convert use AI to convert a trading view indicator Gaussian channel into a strategy also. So that's what we have done by using AI tools, and we have covered a lot of other AI tools also, which basically can help you prepare PPTs, summarize videos, write notes, prepare blogs, and also AI avatars you can create. All that is there in AI playlist series. But today's videos focuses, using AI to do stock picking for investing. So, what is stock picking? Stock picking is a technique which is used by fund managers, where they pick a particular stock which has a huge potential to grow and give huge returns in the medium term as well as the long term. So generally, the it is also referred to as a multi-bagger in some circles. So multi-baggers generally give you multifold returns, around 2x, 3x, or 4x returns they will give you. And identifying these stocks and investing in them, and reaping the profits is one of the technique used by fund managers who are heavily involved in investing. The other techniques are also there in investing, like portfolio diversification, and uh, we have value investing and momentum investing. But this is one of the technique which is stock picking, and this is widely used even in hedge funds like Citadel or DE Shaw. In Citadel, there is a around 40 portfolio managers who do stock picking in different stocks as well as in sectors. And DE also uses fundamental analysis apart from quantitative analysis. And this quantimental analysis is the new word, that is basically a combination of quantitative plus fundamental analysis to do trading and investing and make money. So what we will do today is we will ask ChatGPT. This is our AI tool. You can use any tool. You can use DeepSeek or Perplexity or whatever. I have used ChatGPT. Uh, so what I've asked ChatGPT is, you act as an expert fund manager or for a particular hedge fund like Citadel or DE Shaw, and pick some stocks from the Indian stock market. Okay, which will be multi-baggers. So multi-baggers are returns of around minimum 300%. 2x is minimum, so 2x, 3x, 4x. Okay, in the coming 5 years, and every year minimum 40% it has to return, because mutual funds only return around 12%. So if we are running a hedge fund, we should at least return 36 to 40%. Otherwise, there is no edge for us. Okay. So that's what I've given the prompt to it, and wanted to see how it replies. So what it said is, I'll approach this as a quantitative hedge fund manager, and I'll use different techniques like data-driven screening with macro insight. So that is the macro strategy we discussed, right? In hedge funds, they use the macro trend strategy. Macro insights, it's going to use sector trends. It's going to use and asymmetric return potential also. It's going to use to identify these multi-bagger stocks in India, and it's aiming for a potential which we gave it to it, like 300 plus returns should be there in 5 years, and 40% minimum annually should be there. Okay, and a disclaimer is there again, this is not a financial advice even from my end. Before you invest, you take your advice from any financial advisor and then only invest. This is just, for educational purposes we are doing it, how we can use these AI tools for stock picking and in investing. Okay. So yeah, so that's what it is. So it has used a particular framework to come up with the result. So what it is doing is to find the multi-bagger. It is giving certain filters, okay, selection filters, which is growth potential of the company. It is checking revenue and earning per share, and the compound annual growth rate should be greater than 20 to 25%. So compound annual grade CAGR is greater than 20 to 25%. Sector tailwind. So when the basically the companies, grow when the sector tailwinds are there. Like, when IT boom is there, IT companies will grow, and any company in that IT industry will grow. So that's what a sector tailwind is. And now the sector tailwinds are favoring AI, artificial intelligence, digital infrastructure, EV, which is electric vehicles, green energy, specialty chemicals, defense, and fintech. So it's going to take use those sector tailwinds, use a CAGR of greater than 20 to 25%, valuation less than 1.5, so it's not overbought technically. So there is some value there. You're buying at a less price compared to a high price. Market bias, it's going to use mid caps and small caps only, because large caps you don't have huge growth rates there. Only in mid caps and small caps only you can, there's a potential to make large profits, because those companies can grow and become big and generate a lot of money. Moat and edge. So edge also it will check, like technology, any technology advantage is there, export edge is there, intellectual property edge is there, regulatory advantage edge is there, and ownership quality, high promoter holding, FIS, DIS buying, DIS buying, and low pledging. So this is what are the factor selection filters it has used. It has come up with these seven picks. So this is all. It's not financial advice. This is just for educational purpose. Okay, so just making clear again. So some companies it has come up with KPIT technologies. The reason it's giving is, it's an automotive software company, autonomous driving and EV software it is developing. It has partnerships with BMW, Renault, and Honda. CAGR is greater than 25%. India based but globally exposed. Target CAGR is 45 to 50%. Neogen Chemicals, it's a chemical lithium ion battery um, company. Strong R&D pipeline and export driven. Target CAGR is 40-45%. So yeah, aerospace it has picked Data Patterns Limited. Strong order book from DRDO, ISRO, and HAL. And Indian's defense budget and private sector push is the tailwind. And target is 45 to 50%. Map my India it has selected. So navigation tech, monopoly grade player in Indian geospatial and navigational tech, SaaS-like model, and growing adoption in EVs, logistics, drones. Target is 40 to 50%. Equitas small bank, financial inclusion. So strong growth in low ticket, high yield lending, and low cost valuations, good promoter alignment. So these are some of the stocks. It has PSP projects in construction, contracts from government and private, and profitable zero debt company. Return on capital employed is greater than 20% for this. High promoter stake is there, and so yeah, and it has selected Sirma SGS electronic manufacturer, key player in electronics manufacturing boom, Internet of Things, IoT, and all these things. So I just did a portfolio construction. So this is similar to a diversified portfolio. So it has did stock picking, but all those stocks are put into your portfolio, and this is portfolio diversification. Weightage is given to each particular stock. So it has given KP80 20, Neogen 15, rest data patterns 15, MapMy India 15, Equitos 15, PSP 10 10. And this is what is a portfolio, and it is exposed to artificial intelligence, electric vehicles, defense, digital infra, financials, and chemicals. So that's what it has come up with. Okay, which is very interesting, and it is asking us to add a few momentum filters also, like 6 month, 12 month RSI, FAIDI flows. Also, we need to check earnings revision scores, back quarterly revision scores. We have to check, and exit rules. We have to put if there is any valuation stretch, fundamentals get deteriorated or price crashes there. Okay, so that's what it has come up with. So I told it, and it has told me, like, initially that generating 400 percent is actually, if you see the reply, it tells me that it's pretty much impossible. Yeah, somewhere it says to me that it's not even the best hedge fund manager can achieve do this. Okay, but it says, you're very ambitious. So I told it that. After it came up with this, what I asked it is, that's all good. Not sure where that chat is. Let me check. Yeah. Yeah. So I told it, that I have been able to generate 400% returns in equities. So the conversation that happened is, it told me that 40% returns is too optimistic and too aggressive, and that there will be a high risk involved in it, and you can't achieve it. But it gave the logical reasoning as we discussed above. I told it, no, no, it's possible. Forex returns, multi-baggers are all possible. And I was able to get Forex returns in Dawat the last 2 years. And I was able to get 100% returns in most of my investing. So then what I told it is, you find some stocks like Dawat where I achieved 400% in 2 years, right? So you find some stocks like that, and you prepare a filter for it, for investing. So then what it has done is, yeah. Yeah, then it started saying that it's possible, and it's been done repeatedly, and so this is where I think that it's impressive. Yeah, not sure. Yeah, it's possible, and you can do it when cyclical turnaround or sectoral tailwind stocks are there. Like Dawat was able to achieve it 400% in 2 years due to global rice shortages, premierization of branded basmati, and strong export demand, and re-rating of FMCG like rice players. BHL also turnaround plus capex cycle from 30 rupees to 300. It has raised government push for infra and clean energy, strong order book, and PSU stock re-rating and improved financials. PNB also same, reduced non-performing assets, high credit growth, sector-wide PSU bank rally from undervalued level. So that's all value investing, PSU, BHEL, um, and basically we raided the bull market and was able to make 4x or 2x returns. Okay. uh, and yeah, then I told it, so I was able to achieve it. So you take these stocks as a uh, parameter or the reference, and you come up with some framework. Okay. uh, it's saying I'm already thinking like a hedge fund manager. Okay. Timing the business cycle, riding sectoral rotations, investing early in companies, and having conviction and holding through volatility. This is what a fund manager, hedge fund manager needs to have. Timing the business cycle, riding sectoral rotations, investing early in companies, and coming out of long consolidations or crisis, having conviction and holding through volatility. Okay. But yeah, that's not what we want to discuss. We want to discuss, based on basmati, what are the future picks, okay, and what is the framework we can use. So this is what it has come up with. So capex plus manufacturing boom is going to be there in India. So PLI, make in India thing. So infra, railways, defense, capital goods are going to maybe become multi-baggers. So it is giving Bharat Dynamics, Mazagan, Dock, and eventually in recent last 1 or 2 weeks, all the defense stocks have gone 44% high. Okay. So capex, chemical and pharma niche exporters, India replacing China for global supply chains. So Deepak Nitrate, Aarti Pharma Labs, and Newland Labs, these fit into that particular criteria. Domestic consumption premierization, mid-side FMCG, footwear, quick service restaurants, campus, Bikaji, and Green Panel, PSU, financials, and infra. And these are undervalued still, HUDCO, IRDA, REC, and LC. Okay. So this is what it has been able to do for us, and it asked me, can do you want a quantitative filter tool for identifying stocks like Dawat before the breakout, and yeah, basically identify the multiplier setup. So this is all for education purpose, guys. Again, I am reiterating, okay. And I asked to do it, and this is what it has come up with the criteria. So it has identified sectors, so defense, and FMCG, market cap, PE ratio, return on capital employed, it has checked, sales growth it has checked, profit growth it has checked, and price momentum it has checked. Okay, and promoter holding also it has checked. It has already given you why it has selected the strong return on capital employed, 3 year sales and profit growth, low debt, reasonable valuations, strong price momentum, high promoter holding. So this is using AI for stock picking. I just wanted to do this video. And stock picking is one of the technique apart from portfolio diversification, value and momentum investing in the investing world, and we can use AI to help us do it. Of course, we have to use our human brain and judgment at the end, but AI can speed up the process and help you as an assistant to do the things quickly. So that's it for today, guys. Have a nice day. Bye.